So Tesla, obviously stock's back over 200. What happened to 50 to 60 bucks, right? First off, the 50 to $60 thing, there was just a lot of people just throwing out prices. When stocks are going down, people just start saying, whatever. It has no fundamental backing. It has nothing like that. It's just like, just ridiculous talk. No different than when you're in an insane bullish market, any price targets thrown out there. In a super bearish market, they just throw anything out, like, 50, 60 bucks, $1. How about $0? How about that, right? Now, something very important you got to understand is, I posted this in the private stock group, I believe it was yesterday, yeah. A couple of charts to keep in mind for future Fed hike cycles and unemployment cycles. I would always remember these. Market bottomed about 9 months before unemployment peaked in 2009. Market bottomed 9 months before the Fed did their last rate hike in the latest hike cycle, right? Now, this is very important. Why is this important? Something like this shows you the stock market plays in the future. It's not waiting for confirmation that a bottom has been reached or a number is as bad as it's going to get or as good as it's going to get. It's playing to the future, okay? The market bottoms way before the bad news ends. You can keep getting bad news in regards to a stock, and yet the stock price is moving up. You can keep getting bad news in the stock market, and yet the stock market's moving up. And a lot of people have trouble wrapping their heads around this because they think the world should be perfect. And in terms of like, you get no more bad news, okay, now the market can go up or stock go up. It doesn't work that way. It's never worked that way, folks, okay? Tesla margins are likely going to hit a new low this quarter we're in right now. Okay, the quarter we're in right now, Tesla margins are likely going to hit a new low for the company. I say a pretty decent probability of that. Then they're going to likely stay super low next quarter as well. But Tesla stock bottoms out way before margins and EPS bottom out, right? So although we're in a quarter right now where the margins are going to be horrible for Tesla standard, by the way, likely bad next quarter, the market's already looking to the future, okay? The market's already looking in the future. It's already thinking about the back half of the year. Great investors can see the future. This is why you make the big bucks, okay? And if I look at like myself, right, I'm not always going to be right. But the bottom line is I'm right very often. Very often. Am I going to be perfect? Absolutely not. But it's my job to see the future. It's my job to look at a meta stock years ago and be able to see that future, right? And now sitting on $658,000 gain. It was my job to see Tesla. It's my job to see Amazon, to see Elf, to see Palantir. That's what my job is at the end of the day, okay? And that's what as a great investor you do. And I have four silver play buttons in my house, right? Like, why have I had that much success on YouTube? I don't even edit my videos. I literally just take a picture of myself for the thumbnail and throw it up there. I'd spend less than 5 minutes on a thumbnail. I just put in such little effort to YouTube compared to like all these edits and cuts, and all these people have these prepared, their whole video is prepared, and they got pre-prepared remarks and all this stuff. And yet I'm one of the most successful finance people in the world, year in and year out. I get the most views. I make the most money. Why is that? With the least effort in regards to my videos. The reason being is because people know I know the future. I'm not always going to be right, but I'm being right a whole lot more than I'm wrong. And so they tune in and year out to hear my opinions on stocks in the market in general, without all the fancy cuts and the fancy edits. And I make my videos super long. I'm not even like the most well optimized. Like if anything, especially in this day and age, you're better with like shorter content. And I'm out here putting like 30-minute videos out. It's because people know that I know a lot, and I know a lot about stocks and the market, and so they tune in and year out, right? And it's because you see the future. There's a great line in a movie called Margin Call, and he says, why do I get the big bucks? He flies in on a helicopter, and everybody's just like bowing to this man. He's like, why do I get paid the big bucks? And basically he goes into the reason he gets paid the big bucks is to tell you what's going to happen in the future. Everybody else in that room is telling him what's going on right now. He's there to look out to the future and say, we need to make certain moves, right? You look at this man right here. Do you know who he is? Some of you guys might know who he is. I'm not even going to tell you who that is, okay? Some of you guys might know who he is. Some of you guys are probably like, I don't know who the heck that guy is, okay? That man right there makes over $10 million a year. And the reason he makes over $10 million a year is because he's really freaking good at being able to predict what is going to happen in the future and the right plays to call in the perfect situations. And he wins Super Bowls, and he's very, very successful. And just for playing a game, just for coaching a team and knowing what is likely to play out in the future and the perfect plays to call, man makes over $10 million a year. You got to ask yourself, why does Jamie Dimon make $36 million in 2023, right? Jamie Dimon makes that much money and gets paid that much money because he can see the future. He can put JP Morgan in the best position possible to get through any market possible, right? Elon Musk, the richest man in the world. I believe he's still the richest man in the world. Why is he so rich, right? And people get confused with this. They think he's like down there at the Tesla factory, like with the engineers and like doing stuff and at SpaceX as well. No, okay. Elon Musk knows the future. Elon Musk can predict the future, and then he can put that into action. And he sees we're going here, we need to go here next, and he knows how to put that in motion. So then a bunch of people inside an organization can all do that, right? It's magic. Franz, Elon Musk. I mean, who could have ever thought this would be the most talked about, exciting vehicle to be launched in human history? There's only two men that really could have seen that, Elon Musk and Franz. The rest of everybody's just too busy worried about debating it and whether they love it or whether they hate it. And all along, those guys knew this is going to be ridiculously successful. Everybody's going to want one of these, right? Steve Jobs, I mean, your kids' are going to be learning about Steve Jobs someday. You know why? Because he was able to predict the future. We're going here, we're going to make that happen, right? And so in the market, it's the same exact thing. A stock like Meta, for instance, right? You look at Meta. This stock bottomed in November of 22. When did its numbers really bottom? The truth is, the numbers really bottom when you start showing year-over-year growth, okay? Well, they didn't show any when the stock bottomed. They didn't show any growth the next quarter either, because if you compare that, they did $4.6 billion in net income versus over $10 billion in that previous year, right? Then the next quarter, they did $5.7 billion, but that compared to $7.4 billion in net income the previous quarter. So their numbers were still bad, trash, if you want to call them that, even a long time after the stock had bottomed. Finally, when this quarter came out, this was already late July, early August of 2023, right? Finally, they started showing year-over-year growth. So in a perfect world, you would say, okay, in July or August of 2023, that's when Meta stock should have bottomed, because then the numbers actually started to increase year-over-year, blah, blah, blah. It's not the way the market is. The market is made up of participants whose their job to see the future and be able to predict the company's going to get back to positive net income growth, but they start buying the stock and acquiring the asset way before it actually plays out, okay? This is extremely important to understand in the market. There's a belief that Tesla in the back half of the year is going to see their numbers improve. I have that belief, and I can tell you there's a lot of people with big money that also have that belief. And so that's why a Tesla stock is starting to perform very, very well overall. Now, you can go to the stock and you say, the stock went from $400 to $100. And it happened quick, right? And who knew that was going to happen? I told everybody, watch out, Tesla's going to go through a tough time. I try to talk the bulls off of their insane bullishness they had in 2021 in regards to Tesla. I'm like, I know this company really freaking good. They're going to have a tough time. And what did I say? I said that tough time is going to last several years. And sure enough, I was right on about that, right? The big fall. And it was before it was obvious to most people. It was obvious to me, but for most people, it wasn't obvious. By the time it was obvious, the stock was already bottoming. Keep that in mind, right? And why did that happen? Well, you got to first understand why Tesla went on its first big epic run. Why did it go on that big, huge run that attracted so many people that were never invested in Tesla before to all of a sudden start to buy this stock in 2020, 2021, 2022, right? They flipped to profitability. They went from being a huge money-losing, money-suck company to now a fun company that's making some real dough and has great cash flows. They also had a Model Y ramp, and then they had Fed funds rate at near 0% for most of that time, right? So, guess what happened? I looked at this and I said, oh, all the things that have been going right for Tesla are now going to be working against this company, right? Whereas their profitability is going to start going down. Model Y is going to already been ramped, so there's not that new excitement cycle for Model Y. And then the Fed funds rate went to 5% plus. The Fed took away the punch bowl, as they say, right? And I knew that was going to happen. I tried to tell people, they didn't listen, but it is what it is. But in regards to that, it was obvious for me to see that. It was obvious when most people just couldn't see it. They couldn't wrap their heads around what was going to happen there. Now, think about Tesla moving forward. We're in a bottoming out phase for margins. Profitability could start to increase for the company as early as the back half of the year. Cybertruck's going to be ramped by the end of this year, fully, right? Plus, we have the next big excitement cycle, which will be around the Model 2 or whatever the next vehicle is. So now we're going from a very depressing cycle in regards to Tesla to a very, let's call it, exciting cycle for Tesla over the coming years, okay? And Tesla will be primed for its next big bullish run, and it already honestly started that big bullish run, right? Now, that goes into Meta. Why does the stock go up every dang day, right? It's like it seems like every day you wake up, Meta's up again and again and again and again and again, and it just doesn't stop going up, right? Well, got to understand a few things, okay? The first thing is, and there's different reasons why different stocks go up, and that's why you can't just say it's like one stock, it all works this way. No, it's a case-by-case basis, okay? This is a high-level game of chess. The reason Meta keeps going up is there's a rotation game going on, okay? This rotation game is out of stocks like an Apple, for instance, right? Apple, after that latest earnings, it became very obvious to everybody that Apple's not going to have a great 2024, right? The numbers are not going to be very exciting in 2024 for Apple, right? And so, what was also found out, it looks like it's going to be a great year in 2024 for Meta, right? So now we have a game of rotation of people rotating money out of a stock like Apple. This is the past 3 weeks. Apple stock's gone down about 6%, while Meta stock's gone up 23%, right? And that money because keep in mind, if people are putting selling pressure on Apple stock, let's say day in and day out, well, the money's going somewhere after that, right? It's not just going to like evaporate. If the selling pressure is being put out there, the money's going to go somewhere. And I can tell you where it's going. It's pretty obvious at this point in time, right? And keep this in mind. Apple's around, we can call it off roughly a $3 trillion company, while Meta's a little over a little over $1 trillion company, right? 1.2 trillion. And so when money rotates out of an Apple, you're talking about a company that's over 2x the size market cap as a Meta. So that money coming into a Meta can be very impactful for what happens with the stock price, especially when no one wants to sell Meta right now, knowing that their numbers are likely going to be phenomenal this year and likely knowing there's still a lot of upside in the stock. Who's out there that's like, I got to sell Meta right now? So you have a lack of sellers and you have buying pressure from the rotation game. On top of that, there's other rotation going on. For instance, you look at a stock like Google McDougal, right? Google McDougal, this past 3 weeks or so, this stock is down about 5%, we can call it, while Meta's up 23% in that same amount of time. Why is that going on? Well, Google and Meta always are compared to each other. And it's very obvious if you look at the latest numbers that Meta is the winner, chicken dinner. And it's the far better growth candidate out of those two companies. And so people are even looking at that and they're saying, why would I want to be in an underperformer like a Google? Why not put my money in an overperformer like Meta, right? Meta's made a massive divergence between what their revenue is going up, what their earnings per share is going up versus Google now at this point in time. And so people are saying, I want to be in the big dog. I want to be in the one that's actually growing substantially. And so don't be surprised at all if Meta's market capitalization passes up Google. Do not be surprised at all, okay? Now, on top of that, in regards to Meta, and I don't think I'm the only one that, is figuring this out. I think there's some big money out there also figuring this out. There's going to be a price target scramble that's going to happen likely in Meta over the next 2 to 3 months. What is this? So a lot of analysts are bullish on Meta, right? 40 have a strong buy, 11 have a buy, 8 have a hold, 2 have a sell. So overwhelmingly bullish, obviously, on Meta, as you would expect, given their great numbers and the stock price performance and all sorts of things. But where analysts are screwing up here is their price target's way too low. This is usually a 12-month price target. They're at 511 right now. Well, Meta stock right now is at 484. It's going to be 500 plus very soon here. So what's going to likely transpire is a price target scramble over the next 2 to 3 months where these analysts have to just suddenly up their price targets. I believe I just heard today an analyst up their price target on Meta from like 475 to 550 or 555 or something like that. This is going to play out en masse. Look at how many analysts cover. And almost every single analyst is going to have to bring up price targets soon because they're looking sillier and sillier and sillier as the days go on here in regards to Meta stock, right? Even the more, let's call it less bullish analysts, they're going to have to bring up their price targets. The average price target on Meta right now, in my opinion, should be somewhere around $575 to maybe $595. So we're way low. So there's going to be a big game of catch up here in regards to that price target, and then that's going to be whenever you get that big price target scramble, that's like becomes a self-fulfilling prophecy of like pushing the stock higher and higher, and then the analysts have to keep coming out, running over each other, bringing up their price targets one after another, after another, after another, and it just creates another huge bullish dynamic in the market overall. So that's got to play out here, right? And on top of that, to add maybe insult to injury in this whole situation, if we can call it that, the valuation's still way too cheap on Meta. Meta should easily be commanding a 30 to 35 forward to P right now, and it's easily, given the growth rates this company has on their top line and bottom line. And so you have a valuation here in regards to Meta that's far too cheap. Far too cheap. And so you have all the dynamics lining up perfectly for Meta at this point in time, and that's why that stock just goes up day after day after day after day. And I mean, Meta's on its way to 550 here quickly, in my opinion. We'll see. 550 quickly, and then after that, it's going to be 700. So, and then maybe after that, we'll have a pullback. Maybe something will happen in the economy, negative, something, will transpire. But we got a ways to go in regards to this whole Meta situation. And that's why that stock goes up, it seems like, every day, and why likely it's going to keep going up. If the market could just be flat, and Meta will still be rolling. And never mind if the market's a little bullish, Meta's flying. So, either way, Meta's set. The only thing that could keep Meta down right now is if the NASDAQ crashed or just some epic underperformance from the NASDAQ. Outside of that, Meta's just going to keep rolling. 550s on the way quickly, okay? Let's get into Google stock. Google McDougal.
Nearly 2% today after a higher than expected CPI report this morning. And among those laggards are mega cap tech, Meta, Amazon, and Alphabet. But
Meta's rolling today, baby.
Recently upped his price targets on all three of those names, especially Meta, hiking his target from $470 to $555, citing upside momentum driven by AI. Joining us now is Rob
Meta's
Sanderson.
He's senior internet
analyst at Loop Capital Markets. Rob, thanks so much for joining us. I guess let's start there with Meta, since that was kind of a big price target hike. And I guess maybe today, notwithstanding, explain some of your reasoning there for why you see the upside potential in Meta.
Yeah, there's a lot of momentum. Obviously, surprise on the upside, very strong fourth quarter, but the outlook was really what caught people off guard and really unexpected. The revenue growth expected to accelerate by around 400 basis points to 29% at the high end, which is obviously very impressive on numbers that are so large, and a comparison that gets 700 basis points tougher. An acceleration on that kind of comp at this kind of scale is just kind of unheard of. It shows a lot of momentum behind the businesses. I think they've found a lot of unlocks in applying artificial intelligence to make advertising easier. Like that's, I think, the underlying story behind all that momentum. And there's a lot to like at Meta. Before
we move on to some of your other names, I mean, I know AI is sort of the buzzword across all tech companies and really, I guess, almost all companies in general these days. But is there a risk as we go into this very potentially contentious election cycle of AI being used for not so good across social media platforms like Meta?
Yeah, and this company certainly has history on such issues. So it is definitely going to be a growing focus through the year. The company has invested, a lot of time and attention and resources and frankly, money in just, keeping bad actors off the site. That's always a cat and mouse game. There's always going to be, potential for ill intent on such a wide scale and influential platform, especially into an election cycle. So be assured, it's not going to come as a surprise. They're preparing for such interference, and we'll see how they manage through this.
What's working best for Meta?
By the way, in regards to Meta, I mean, this stock, it's funny, it's my biggest investment, but I don't really talk about too much kind of what I think is going to happen short term with the stock. Here's kind of what I'm thinking in regards to Meta. I think in the very short term, it's very possible stock could run to anywhere between 550 and 700 in the very short term here. I do a little worry about the numbers in the back half of the year because the comps get tougher. But with that being said, we do have a political season coming. And so there's going to be a lot of spend on politics in the back half of the year, and that should help numbers. So I'm a little more worried about the back half of the year, but I'm more worried about 25 because then we're going to have really tough comps because Meta's going to put up very impressive numbers pretty much this entire year. But then you got to comp against those numbers in 25. And so then the hope is the economy's even in a stronger spot so they can hopefully post decent numbers, but it's going to likely be a pretty decent deceleration in growth in 2025. So I think short term is just a lot of fun in regards to Meta, but if I had to predict a little bit of a tougher slide, maybe in 25 or even maybe in the back half of this year, that's just kind of my thoughts in regards to Meta, at least in the more short term, right? The next 5-7 years, does any of that matter? No. That's where you got to differentiate between short-term opinions and long-term investment theses.
I think it's the ability for them to make it easier for the long tail of advertisers. It's small and medium businesses that, are really what make Meta the envy of the industry. They stopped disclosing this metric 3 years ago when they hit 10 million, and we should definitely assume that it continues to grow. There's a lot of focus on how the AI platforms are doing a better job of targeting for large advertisers. But it appears to me that Meta, has really sort of cracked the code and is now unlocking a lot of value for the smaller, mom and pops. And they are comparing against, a pretty disruptive period where the changes on the Apple platform, I think really, took a lot of time for those smaller advertisers to adjust.
Rob, I want to move on to Google. I understand you have this as a hold, but you up the price target here from $140 to $155. Interesting, though, Google ads were up just 11% in the fourth quarter, while Meta grew their advertising revenues by 24%. So certainly not seeing at least as much momentum as Meta here. We have the Dow down, just to alert viewers, down 700 points now. That's good for 1.8%. But again, Rob, back to Google here. I mean, what do you like here that you see upward momentum getting us closer to 155 when maybe it does not have the same types of momentum in an area like advertising as Meta?
Yeah, I mean, the Google businesses are performing well, and management's very focused on cost discipline. I think the issue that maybe holds it back compared to some of its mega cap peers is that Google's seeing more competitive pressure now than we've seen for a very long time. And, in the ad business, it's the growth in social and the big numbers that Meta's, putting up. Retail media is becoming more of a competitive threat, especially Amazon. But really, the market's very focused on AI and particularly generative AI, as you mentioned earlier. And it's not clear that Google is going to be able to maintain their dominance. Like it has been the best technology company for a couple of decades, and now they're not leading the way. We just saw reports last night that OpenAI reached a $2 billion revenue run rate in the fourth quarter, the fastest company in history to do that. Google's been investing more in AI than anybody for forever, and here they are with a startup, stealing the show. So that's going to just, I think, raise this wall of worry for investors and probably hold the stock back.
Okay, hold your horses for just a moment in regards to Google McDougal, okay? So, first off, OpenAI, startup, I wouldn't really put them into a startup category. That company's got so many powerful backers, it's ridiculous, all the way from its founding with obviously Musk, right? To their relationship with Microsoft and so many others. It's hard for me to even put them into like a startup, at the end of the day. Second component is Google. I think he brings out a great point. They're facing more competition than they ever have. And I think that's true, right? On the search side, if they're being disrupted there potentially, which we still don't know if, there's real disruption. But if there is, that's like the first time, honestly, in 10, 15 years, they've even had to worry about competition. They haven't had to worry about competition on the search side for literally a decade to 15 years now, right? So this is the first moment of that. On the YouTube side, which is their other big business, certainly there's competitive forces that take attention away, right? Whether it be Instagram with Instagram Reels or TikTok and other services, but really Instagram and TikTok. Yes, that definitely takes some attention away from YouTube as well, right? For people enjoying that sort of video content. In terms of VR, AR, it looks like YouTube can be successful there, right? But in terms of Google side, I don't know about that, right? And so it looks like that's going to be a race between Meta and their Quest product and obviously Apple with their Vision Pro product. It looks like it's going to be a two-person race. It looks like Google's going to be on the outside looking in versus Google had a primetime position in the mobile space with Android, right? And so I don't know how that's going to shape up. So I like Google. Good company, good valuation, good stock, but they are facing more competitive pressure, certainly. across the board than they have in any time within the past decade to 15 years. And so I do think he brings up a great point there.